Hey guys, how's it going? Yasir Khan here, and in this video I will be talking about why the truly wealthy pay a very small percentage in taxes. Okay, so I get this question many times a month, and I thought I'd just make a video about it. That way, my subscribers can just get to know the answer without me going into a lot of technical details because no one wants to. I do understand that a certain part of personal finance and investment and uh, business related stuff is fairly dry, right? So I don't want to bore you with the technical stuff. So what I always try to do is in my videos is to make sure that I keep things really interesting and I give you only the information that you would want to know about. Okay, so here's how it goes. Now, whenever people say that we should increase taxes on the rich, they don't realize that the tax code is structured in such a way that no matter what you do, the truly rich will not see an increase in tax rates. I know it sounds really messed up, but this really is the case. One, because the tax code in any country around the world is written by the rich for the rich. Okay, and I don't mean it in a conspiracy sort of a way. It just happens to be the case. If you look closely at it, you will see that if you're truly rich, you just will not be paying a lot in taxes. And before you get upset and you say that this is unfair, I want to tell you that you can use the same tax code to benefit your own self if you start acting and investing like rich people do. So that's totally open to you. It is a choice that you can make if you want to, right? But let's back up for a minute. Now, most people around the world make money through earned income. This is where you go to a job, a 9 to 5, you trade your time for money, commission, salary, wages, whatever it might be, okay? Only 2 to 3% of people around the world make money through passive income, okay? And passive income is anything where you do not actively trade your time for money. In other words, you have an asset which is generating income for you. Okay, if it sounds too technical, I'd like to elaborate a little bit. For example, real estate. If you buy an investment property, you rent it out, rent it out to a tenant. If the rent payment from that tenant more than covers all the expenses of the property and gives you a little bit of change income to put in your pocket, then it's an asset, right? It's making money for you. But here's the thing, that asset is generating passive income because you are not going to a 9 to 5 job or trading time for money to make money through that asset. I hope that makes sense. The same thing is it's the same case with stock dividends. I mean, dividend stocks, right? So you have two types of stocks. The first one is regular stocks. You buy for $10, you sell it for 20, and you've made a $10 profit. Okay, that's not passive income because you've sold the asset. Dividend stocks are where you invest in a stock and then the company where you invested in pays you a quarterly or a monthly dividend as a way of thanking you for being one of the part owners of the company, right? You get a check in the mail without working for that money, right? Because you've made the investment and you keep on getting the dividend for the long term. Now, here's why the truly rich, do not pay a lot in taxes. Because if someone is truly wealthy, almost all of their income will come from passive income sources. Okay, this is very important to understand, guys. Almost all of their income will come from passive income sources: real estate, dividend stocks, businesses, online businesses, offline businesses, whatever it might be. They're not trading their time for money. So the tax code does not apply to them the same way as it would apply to most other people around the world. Do you get that? Okay? It's just that simple. The second thing to understand is that you can only earn passive income if you invest your money into a passive income source, right? Which means that by definition, you have paid the tax on that money already that you're about to invest in an asset. In other words, The rich have already paid the tax on the money that they invest in real estate or dividend stocks or online or offline businesses. So that's why the government says, well, okay, you don't have to pay us a lot again in taxes because we've already taxed you. The third thing to understand is that a good portion of the wealth of the truly rich comes from avenues which directly help the government and society at large. What do I mean by that? So if they're buying houses as investment properties, they're doing it to make it easy for the tenant to find a place to live, because they probably don't have the money to buy a house themselves, so they just get a house on rent. So they facilitate the economy and society. Another way that they do so is by creating a business which hires other people in that society, right? And that's why the government rewards them with a lower tax rate. Okay, so this is how everything works. You can either trade your time for money and pay really high taxes, okay, because it's earned income, or you can be financially educated and invest in assets which generate money for you, which generate income for you. And you don't have to work for that money. And that's why you don't have to pay a whole lot in taxes on it. Okay, so when Warren Buffett, the richest guy the third richest person in the world, says that he is paying a lower tax rate than his secretary, then he's right. Because his secretary is earned income. She's trading her time for money, right? So she's paying a really high tax rate. On the other hand, Mr. Buffett is an investor. He's not trading his time for money, and he does not have earned income. He's making money through passive income because he's getting dividends from the stock holdings that he has. That's why he pays a tax of not more than 5 to 10%, as far as I know. But the secretary is paying probably between 20 to 35% in tax. Can you see how that works? Another thing, before I forget, I think I didn't mention this in the video, is you only pay taxes on your income, okay? You don't pay taxes on your assets, okay? This is why it's called income tax. All right, now there might be, there's sales tax and other types of taxes as well, but the biggest chunk that you will pay taxes on is your income, not on your assets, which means that you could have a property worth $10 million, but if you don't sell that property, it does not become your income and you don't pay taxes on it. This is why billionaires, people with over $1,000 million in assets, they don't pay a lot in tax, because that 1 billion is, it's asset, it's equity, right? It's not income. If you don't understand this last point, that's totally fine. It does take a little bit of time to finally internalize, but I think I've covered everything over here. Guys, it's very simple to understand, okay? If you're not willing to trade your time for money, if you want to work extra hard to make sure that you see success, you can do that. And you will pay lower taxes that way, right? But for that to happen, you have to be financially educated and financially sophisticated, right? You need to have financial IQ, and it's a skill just like every other skill out there. You just have to figure how things work, and then just go with the flow for a couple of years. And once you really get the hang of it, then you start using it, then you start exploiting it. Okay, I don't know if exploiting is the right word for it, but if there's a benefit that can be had legally and ethically, of course, then why wouldn't you want to go for it, right? So thank you once again for watching this video. I hope I made a lot of sense. And let me know if you have any questions. Subscribe to my channel, like the video, and I'll see you in the next video. Thank you.